Good day and welcome to the Subex Limited Q4FY20 results conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. G.V. Krishnakant, Company Secretary. Thank you, and over to you, sir.
Thank you very much. Good evening to everyone who have joined the earnings call for the period ended March 31st, 2020. Now I would like to introduce you to the members of the management who are present on the call. I have Mr. Vinod Kumar, who is the Managing Director and CEO of the company, and Mr. Venkatraman GS, who is the Chief Financial Officer of the company. I would like to start the conference call by going through the safe harbor clause. Certain statements in this call concerning our future growth prospects are forward-looking statements which involve a number of risks and uncertainties that could cause actual results to differ materially from those in such forward-looking statements. The risks and uncertainties relating to these statements includes but not related to fluctuations in earnings, our ability to successfully integrate acquisitions, competition in our areas of business, client concentration, liability for damages in our contract, withdrawal of tax incentives, political instability, unauthorized use of our intellectual property, and general economic conditions affecting our industry. So with this, I hand over the call to Mr. Vinod Kumar to take it forward.
Good evening, everyone. I'm mighty glad to see all of you in the call today and sincerely hope that you and your family are safe and in sound health. The recent crisis due to COVID-19 has led to an atmosphere of uncertainty resulting in disruption that most organizations had not foreseen. At Subex, we are very clear about our priorities in such a situation, and that is to ensure the safety and well-being of Subexians while minimizing the effect of this disruption to our customers. I'm very happy to inform you that at this point in time, all Subexians are sound and safe. So far, only one Subexian was tested positive and another one had shown clear symptoms of COVID. Both these Subexians are based in our regional offices outside India and currently recovering well in their homes. We have had a robust business contingency plan in place to ensure that the continuity of all critical functions in case of emergencies. This was updated with a relevant standard operating procedure to specifically handle pandemic-like situations. Expecting a lockdown, we quickly expanded the work-from-home capacity and also got the clearances from customers whenever it was required to move to a work-from-home mode. We then invoked the work-from-home element of the business continuity plan even before the lockdown was announced, and this allowed us to work through some of the initial hiccups effectively. We also brought back all Subexians who were temporarily at site for various projects back to their base. Our customers have been very supportive, and the transition was very smooth without any disruption whatsoever to our customers. We are also very proud to be partners to telecom operators who are playing a critical role in enabling the society to quickly transition to functioning from home and thereby limiting the spread of the virus. Amidst all this, we closed the financial year FY20, and overall, it has been a good one for us. Before going through some of the financial details, let me give you a brief update on the qualitative aspect of the business. With our purpose of unlocking possibilities and vision to be the global leaders in digital trust, we have continued to execute on the 3 Horizon strategy. On our core, that is Horizon 1, we continue to see interest primarily from Tier 1 customers who are refreshing their outdated technologies. The machine learning-based packages that we have launched around fraud management solutions have been a big success and enabled us to compete very well in most of the competitive situations in all geographies. around the core, they started working on 3 new products, which we intend to launch during this year. The first one is a next generation augmented platforms, analytics platform based on open source components, which will help our telco customers to manage their huge volume of data and drive very meaningful insights out of it. The second is a partner management solution leveraging blockchain. And third is a network capacity management to handle the advanced planning needs of 5G deployment. Coming to Horizon 2, where we have 2 products offering. The first one is on IoT security platform. Subex Secure has been significantly improved from a capacity handling perspective and user experience. We can now handle terabyte per second speed per box when it comes to Subex Secure. This will help us to cater to very large customers with huge data volumes. We have also strengthened the honeypot capabilities, wherein we are finding almost 3 times zero-day issues from the previous levels. On the business front, we have started deployment of IoT security solution in a 5G edge cloud setup in a major geography in APAC, and we expect to make it into a major 5G security reference site for us. We have also strengthened our go-to-market channel with more strategic partners and OEMs. On Rock Insights, the second product in the Horizon 2, that's our analytics as a service offering, we have extended to adjacent verticals of fintech and mobile money and are currently executing a project in the Southern African region. On Horizon 3, we have 2 products, Crunchmetrics and ID Central. On both these products, we are in the phase of making necessary adjustments to get the product market fit right. On Crunchmetrics, we have added multivariate capability to our anomaly detection and now are focused on solving specific business problems in the e-commerce and fintech segment. The areas around business operations like pricing error, transaction glitches, supply chain issues, and on the IT ops side like platform and infra issues are our focus areas. When coming to ID Central, the digital analytics, ID analytics platform, we are soft launched in Indonesia and currently have a coverage of about 40% of the population with 5 data custodians. Both from a revenue and new business acquisition standpoint, we experienced delay towards the end of last quarter. Even cases where we have been officially selected have been delayed on account of lack of people at the customer end available to go through the contracting process. The impact on some of our new business have been even more severe as most of the new projects have been put on hold on account of this crisis. Things have slowly started to progress and operators have resumed discussions now. Now, navigating such a global crisis is a new experience for everyone. While doing our best to ensure the safety and well-being of Subexians, we have been closely monitoring the emerging market situation. The strength of our good balance sheet is helping us to avoid any knee-jerk reactions whatsoever and to operate with the right balance between preserving what we have and building the future. Our intent is not to wait for the perfect solution, but to proceed with what appears to be a good one with the open-mindedness and willingness to course-correct as we go along. Further, setting clear priorities and alignment has become more critical than ever. Towards this, we are implementing the OKR framework, that is the Objective and Key Results framework, very prevalent in the Silicon Valley and used by most of the successful technology companies. And we hope that this will have a significant impact on our overall performance. Further, we are using this period of relatively low market activities to upskill our team and enhance our digital trust portfolio. The intent is to be very well prepared to take advantage of the pent-up demand as and when the market reopens in various geographies. With that, I will hand it over to Venki, our CFO, for an update on our last year financials. Over to you, Venki.
Thanks, Vinod. So good evening, everyone, and thanks for joining in. And I hope you all are safe and working from your respective homes as the respective state regulations have called out. So coming to the performance highlights for Subex for the financial year ended March 31st, 2020. Our revenue for the year was rupees 3,650 million as against 3,481 million in FY19. We had a decent growth of about 5%. EBITDA excluding Forex for the year was at rupees 862 million as against 514 million in FY19. And profit after tax excluding exceptional items, because we did the one-time impairment in the last quarter, profit after tax excluding those exceptional items was at 485 million as against 252 million in FY19. Moving on to the quarter highlights. For the highlights of the quarter ended March 20. Revenue for the quarter for March was at 1043 million as against 961 million in FY20, quarter 3 of FY20. EBITDA excluding Forex for the quarter was at 300 million as against 230 million in the third quarter of FY20. And profit after tax for the quarter was at 320 million as against 49 million excluding exceptional items in quarter 3. We've also been focusing on our managing our liquidity well and ensuring our collections continue to keep up pace. So all of that has resulted in us generating free cash flows of almost 57.47 crores in financial year 20. And this has also resulted in us ending the year with a healthy cash balance of about 90.50 crores. So that concludes the update in terms of the financials. So over to you, GVK, for opening up for the questions.
So we open it up for questions?
Yes.
Sure, thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone wishes to ask a question on one on the touchtone telephone. If you wish to remove yourself from the question queue, you may please press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Sanjay Shah from Alphaline Wealth Advisors. Please go ahead.
Yeah, good afternoon, gentlemen, and congratulations for great numbers. Wish you good health too, sir.
Thank you.
So we saw your support and services and other business growing very well from around 25% to 36% to the revenue. But geography-wise, we have seen that America is going down and APAC and the rest of the world is going up and India being a stagnant. Can you explain why it is so, sir? When we are growing such a fast in India, how do you see that? And what is the prospects going ahead?
Okay, so I think you are talking more from a quarter-on-quarter perspective, and on quarter 3, so let me give you a flavor of the North American market first you mentioned. So this year overall, if you look at from a yearly perspective, we had a very good growth in North America from a year-to-year basis. Obviously, there will be variations from quarter to quarter because if you look at, we are a product organization, and as and when we get a new product and we sell this bulk, the big licenses, on that quarter you will find that there is a revenue jump. But so far last quarter we did have a new contract in place with a very large license revenue. But if you from a year-to-year basis, North America has significantly grown this year as a region. Coming to India per se, India, we have had a steady stream of revenue because most of the we are sort of in a consolidation phase, so we are supporting our customers at this point in time. So from the percentage of revenue that contributes from the Indian market, it has been pretty remain where it is, and most of our focus now is to drive business in North America and and Europe region, where most of the activities with respect to the 5G deployment and other investments are happening. So while you see the difference from a quarter-on-quarter perspective, if you look at from a year-on-year perspective, we have had North America a good growth in North America.
That's great, sir. Nice. So, now you explained about some new business that is objective, and I could not understand that. Can you elaborate, and what is the prospects of that, and what money we require to go through that incubating these virtual startups and all? Our cash flow is very strong. How we are going to use that? That was my main question.
Okay. So, with respect to the projects, new projects that we are looking at, post last year, we have had a specific emphasis to expand our presence in the North American and European region, both with our existing products and the new versions of our core products. When I'm talking about core products, we are talking about fraud management, revenue assurance, and partner management from a digital perspective, because most of our operators are moving digital. Right. So that's what we have been pushing. Now, which in my update, I mentioned about 2-3 new products that we are working, which is primarily oriented around 5G and related areas. So again, the developed markets will lead that effort. So therefore, we are focused in that direction. With respect to the capital required, we have sufficient capital required based on the good cash flows that we have to invest around some of these growth areas. So the capital allocation is being done based on the demands of the specific product line and the business line to progress these efforts in those regions.
That's great, sir. So I'll come back to you for more questions. Thank you very much.
Thank you. Thank you.
Thank you. The next question is from the line of... the next question is from the line of VP Rajesh from Banyan Capital. Please go ahead.
Hi, Vinod. Hi, Venki.
Hi, Rajesh.
Hi. So first question, just on the order book, the year-end order book is around 44 million, which is come down quite a bit from the last year's order book. So if you can give some more color around that, Vinod.
Yeah. So the like-to-like comparison, Rajesh, is about as against 55 of last year. We have done about 50 million of last year. The reason why we have only showing as 44, because the regulatory business, we have decided not to include it as a part of the order book and book it as and when we get the revenue, because there is a lot of delay in getting the contracts in place and initiation of the project. So if you look at our last year 55 million, we did have a 5 million regulatory business. So the comparable number would be 55 last year to 50, or if you remove the regulatory part, then it will be last year 50.
Hello? Hello?
Excuse me, this is the operator. So we are unable to hear you. If participants are requested to please stay connected, we will check the line for Mr. Vinod Kumar Padmanabhan. Please just allow us a moment while we do that. Mr. Padmanabhan, can you confirm if you can hear us? Yeah.
I can hear you now. Thank you.
Okay. You're audible now, so you can go ahead.
Yeah, sorry, Rajesh. So I was just saying that towards the end, after about 10th of March, we did have a big challenge in getting telcos. That most of the telcos were shut. So a lot of cases that were selected got moved out because there weren't people around to close that. So that did affect us both in our core and new areas. So some of those things have hence happened. In fact, we just while in this kind of remote situation, we just closed one of those deals, which was sort of pushed last week. We closed that. So that's primarily the reason. That's a reason when we have some dip in the order intake perspective. But these are things. It's just kind of a delay on account of people not around in office to close the deals, Rajesh.
Okay. Sorry, Vinod, since we were disconnected, what I understood is that 55 million became more like 50 at the end of fiscal year 20. Is that the right way to understand that?
That is correct. And we did have an impact of almost about $8 million or so what is sort of moved out, which we are expecting to close, but people were not even there at the customer price to do the paperwork. So we are working through those things during this quarter to get those things in, Rajesh.
Okay. So what I'm hearing is that by the end of this quarter, it will be back to 53 kind of level. Is that correct?
That is correct.
Okay. All right. And then the second question, if you can share, the Horizon 2 year-end booking and revenues, if that will be helpful.
So we had from a revenue standpoint, we booked about 1.3 odd million in Horizon 2, and the order booking was around 2.6 million, Rajesh. Now, where we had the bulk of the movements is happening from this IoT side. That is where we were tracking some very, very large deals from the governmental sector, and that just got moved out. So we ended the year with the order booking of about 2.6 million. The big chunk of those things which moved out from an order booking perspective is on IoT.
I see. And if I remember correctly, last quarter, your guidance was that this will be closer to 5 million, right? So from 5 million, it has come down to
That's correct.
million.
That's correct. Yeah.
Oh, okay. And do you think this also will come back in this quarter, or is it too early to comment on this?
Look, it is too early to comment on this because I can definitely tell you that telcos have resumed the engagement, and I think most of the things which were sort of pending is sort of moved on. But some of the governmental things, their priorities are at this point in time to address this COVID issue. So therefore, we do not know how the things will pan out, Rajesh. So we'll need some more time to figure out how that some of these new project issues, which are sectors outside telecom that we are focused on, how that will pan out, because we are not in a position to take a view at this point in time.
Understood. And then on the implementation revenues, there was a decline of about 16% Q4 over Q4. And is it primarily because of the COVID that folks were not able to finish the implementation, or was there something unusual in that particular number dropping as much as 15%?
15%. Venki, would you have a view on that, Venki? Because
sorry, Rajesh, which revenue are you saying is declined 15%? I missed that.
So if you look at your Q4 slide number 15, Q4 fiscal year 20 is 36% of implementation, customization, and license, which was a year ago was 44%. So that's about a 50% decline. So I was just trying to understand, was it because there was COVID-related delays, and that's why some of the projects got pushed out, or there was something unusual in that decline?
No. I think there's no COVID-related impact on this one, Rajesh. I think this is a function of what point in time we win new license implementation deals and what stage of it is in terms of our implementation cycle. So if you look at last quarter, Q3, we had some of these implementations peaking up, and therefore we had a higher share of revenues. But this has not come down because of any particular event. Given our nature of the wins at a point in time where these license deals come through. For example, last quarter we had one or two big deals which kind of contributed to that number going up. So this is very episodical. It doesn't have any other reason for the drop in that sense.
Okay. And then just in terms of the cost for the coming year, can you share some guidance on the R&D expenses? Because obviously for the last couple of years we have been heavily investing in Horizon 1 and Horizon 2 and Horizon 3. So any particular thoughts around for R&D expenses in this year?
So what on the new areas, Rajesh, what we are now doing is that we are on an immediate basis, we are investing about $1 million on around the new areas, primarily on account of beefing up some of the capabilities, both in creating the infrastructure required for us to progress some of this business, and also bringing the right team when it comes to track researchers and in various geographies, etc. Now, our approach currently is to wait and watch till we have a good ability to look at how the revenue and other predictions can be done and take a year-end view. So immediately we are looking at releasing about $1 million towards some of these things which are very critical for us to go ahead and do towards scaling the business. Particularly I'm talking about in the new areas, Rajesh.
Okay. All right. I have a few more questions, but I'll come back in the queue. Thanks.
Okay.
Thank you.
Thank you. Reminder to the participants to ask a question. You may please press star and 1 on your touchtone telephone. The next question is from the line of Rajkumar Oza, an individual investor. Please go ahead.
Good afternoon, sir. I'm Rajkumar Oza, an individual investor from Allahabad. First of all, sir, congratulations for giving such a good number. Profit of 48.5 crore before exceptional item against 25.2 crore in FY19. My question is, ID Central has not yet seen the light of the day, maybe due to COVID-19 in Indonesia, Malaysia. Should we not take steps and launch the product from India, preferably from Bengaluru itself? Number 2, are we doing any POCs in for cosmetics in fintech and retail? Have we made any inroad in fintechs and e-commerce? And my last question is, has SEBI delivered no objection to Subex for capital reduction? Thank you, sir.
Okay, let me take the first 2 questions and then I will hand it over to you, to Venki for the last one. Now on the ID Central, our whole business is towards enabling the digital side of the business. And as I indicated, we went into the market and we are at the stage of doing the use cases that are relevant to the market because, we went with a proposition, we got more feedback from the market and those changes have been done. And we now, as I told you, we have about 40% of the population covered by our platform, meaning we have an ability to do identity analytics around 40% of the population in Indonesia, which is a very large country. And we are now in the process of reaching out to the service providers who are going to be our paying customers to start using the service. So I think that our decision of going to the Indonesia and the traction there is quite good. And time that will take is with respect to getting the product market fit right. So that's the first question. So we still feel that Indonesia will be is the right market to start with. There are other countries that we have identified in the pipeline, but India is not there in the first 5 countries that we are approached based on our assessment. When it comes to crunch metrics, yes, we are doing the POCs both in fintech and e-commerce. Obviously, one of the segments that we were tracking was on the travel industry, e-commerce travel industry, and which had a big impact on the COVID crisis. So unfortunately, at this point in time, other than the POCs, most of the customers are wanting to wait for some of these lockdown situations to be over. Earlier we were doing only POCs in the country. Now we are generating a lot of inbound interest from North America and Middle East. So we will be slowly opening up, doing more POCs in those regions as well. So we expect the things to pick up as soon as some of these markets starts opening up, and obviously their priority again, all of them. Some of our customers have seen a huge increase in the demand, and their current focus is to cater to that demand, understandably, and therefore some of these projects have been deprioritized for this time being. We hope that as soon as the lockdown is over, things will pick up and we will have more opportunities, not just from India alone, from other countries to do the POCs and then convert them into a revenue-paying customers. Venki, can you take the question on the BSE approval, SEBI approval, Venki?
Yeah. So, Mr. Roja, the SEBI approval is still, we are awaiting the approval from SEBI. I think with the COVID situation, I think all these regulators also have only limited number of people coming into offices and working, and most of them are working from home. So that has led to some of these approvals taking longer than usual. So we are working closely with the regulators, and we will give you an update once we receive the approval from SEBI.
Thank you, sir.
Done with your question, sir? Mr. Oza?
My question is over. Thank you.
The next question is from the line of Jay Daniel from Entropy Advisors. Please go ahead.
Yes, sir. Earlier, our plans were for FY21, that is the current year, to be the growth year, Horizon 2 and Horizon 3 kicking in. So now with the change situation, how do you see growth for the current year?
Hi, Jay Daniel.
Yeah, hi.
We are unable to make any view at this point in time. The fact is that we have closed the last year with a good backlog, means that we are able to focus on delivering the projects that we have won. And as we mentioned earlier, we have won a lot of net new projects during the course of quarter 2, quarter 3, and quarter 4 of last year. So we are focused on delivering the backlog at this point in time on this new mode of completely delivering from a remote kind of operations. Now, with respect to taking a full view of how the year will be and the growth, it is extremely difficult at this point in time. So we are unable to take it and give you any guidance on that matter, Jay. I hope you appreciate that. Our belief, at least our view is that during the course of, our telco operators are also looking at how the revenue pans out during the course of this quarter, because this quarter revenue for our telco customers will give them a good view of the impact of the COVID on their revenues and cash flows, and thereafter we will get something definite from them. But by and large, at this point in time, the telcos, their long-term investment plan remains same. But based on the revenue trend and cash flow, it is possible that some of the phasing or the reprioritization of projects might happen. But we are not able to take a view about that at this point in time, Jay.
Okay. Are you seeing any pushback on pricing and debtor collection?
Not in a major way. One or two customers requested that for some relief while they were during a lockdown phase. But by and large, we have not seen the issue coming from that. But we do expect from some geographies like Middle East and Africa to get some requests for some relief by and by. But as of now, we have not seen as a trend as yet, Jay.
Okay. So this DSO of 103 days, will it stand or it will marginally go up for the year?
Our plan is to maintain it, if not slightly bring that down during the course of this year. That's our plan. We'll have to wait and see how that pans out.
Okay. Actually, telecom is one vertical that's been quite stable. In fact, it's done well in this pandemic. But so how has been this? You're not nearly halfway through the current quarter. So what has been your experience till now on a general basis, if you can share that?
Yeah. So I think in the last 2-3 weeks, we have seen a renewed engagement from the customers. Most of the customers are engaging with us. Obviously, there are big changes that have happened. The work from home is a major trend that has happened, which means that from an industrial cluster, most of the traffic and the data usage is happening on the residential cluster. So there are things that operators are looking at. They don't know. They are not able to figure out whether they need to change the configuration, because will it be permanent or will it come back? So I guess that they are also in a wait and watch mode. But those projects that have been already kicked or let's say started have started progressing, because there's nothing like a stoppage of all the projects or anything like that. Like you said, that telcos are relatively less affected. But again, from the context, the country, the coverage, the dynamics of the population, all of them play very differently on the response to the COVID and how the revenue impact of COVID situation is on the operator. So, but by and large, we have started seeing the engagement picking up for the last 2-3 weeks, Jay.
Okay, sir. And this $44 million of order book is executable in the current year?
Not all of them. The executable backlog that we started with is in excess of about $40 million. So
$40 million is, if all goes fine, should be executed in the current year?
That's correct.
Okay, sir. And as regards you had an earlier plan to declare a dividend in the current year with if the capital reduction goes through. So what is this thinking on that as of now?
I don't think that we have ever said that there is a plan to declare the dividend. Probably the clarification was that if the restructuring goes well, and if the company decides, there is a capability for us to declare if we have the resources, we have a capability to declare the dividend. But we didn't have any, at no point in time, Jay, we did give an indication that there is any declaration of the dividend going forward. So as and when the restructuring is over, we do have the ability if we require. But again, that is a decision that probably we will take when we get there based on the situation then, Jay.
Okay, sir. Okay. And EBITDA margins will be able to sustain at current levels?
Look, again, it is a forward-looking thing. We are unable to take a view at this point in time, Jay. But I think our current view is that our current focus is that the whole aspect of digital trust, our portfolio and the proposition around digital trust is resonating well, particularly with the larger operators, tier 1 operators, and we believe that as we get more and more digital with this COVID crisis, post that crisis, it will again push most of the enterprises to go digital, and so therefore this whole aspect of digital trust will be more important. So our current focus is to look at how do we make and scale the whole portfolio, both from a portfolio perspective, portfolio coverage perspective, and the growth perspective, Jay.
Okay. That's all, sir. Thank you very much, sir. Thank you.
Thank you, Jay.
Sir, thank you.
Thank you. The next question is from the line of Rishabh Dutt from Counter Advisory. Please go ahead.
Sir, I want to understand that whatever revenue and EBITDA we did in FY20 is the same that we did 5 years back in FY15, and it is significantly lower than what we did 9 years back in FY11. Sir, so can you explain to us, and sir, this is in nominal terms. If we adjust for inflation, then we are way down. Our performance is actually in real terms way short of where we were 5 years and 9 years back. So what's the reason for this?
Okay, when we look at a 9 year back, just from a product standpoint, we did have another stream of revenue from an activation product, which was subsequently we offloaded that product because of the situation of the company at that point in time. And then probably some of you who have been invested for a long time understand that we went through a problem for the company from a capital structure problem for the company for a relatively long period of time, and we got out of that only by FY17 or 10. During that period, we did have a lot of constraints as to what we could do towards enhancing our portfolio, etc. So most of these activities towards enhancing and looking outside our core, they all started sometime during the 2017 FY17 kind of time, and FY17 and FY18, where we completely got out of all the debt situation and we were able to compete well with our new product range. So I think that was a period where from the 2008 time frame, we were in a sort of a difficult mode for a long period of time, and we got out only by about FY17 kind of time. So the whole aspect of this technical that we had because of our inability to invest on this thing allowed us not to compete at all. We lost some of the market, not just the market share alone, but we were not able to bring anything new as a product to the company, product to the market. Only now in the last couple of years we have had some of these new things in the products. So we hope that these new products will go up and our revenues will start going up.
So even if we look at FY17 numbers, so we are flat basically. We are in FY20, we did whatever we did in FY17. So basically what I'm trying to understand, what is past is past. Question is that in future, when do you expect us to break out of this range that we have been stuck in for whatever reason since a long time?
Okay. So I think in the core, if you look at our core where we are driving bulk of our revenue, as a market that the telecom BSS or OSS market which we are playing in is relatively flat. And the only way we are now doing well is we were competing well and we are gaining market share slowly though, because the replacement cycle kick in a particular point in time, and we are preparing ourselves so that we expect that with 5G there will be a replacement cycle coming in, and therefore we will have an opportunity to replace some of the existing vendors and improve our market share. So in our core area, the market is not growing. So if we have to get the breakout growth, our Horizon 2 and Horizon 3 products, which I provided an update earlier, should start doing well, and that's why our focus and investment is around making those product sets work for us.
And sir, we have around 190 crore of tax-related contingency.
Maybe requested to rejoin the queue for follow-up questions.
Sure.
Thank you. The next question is from the line of Sanjay Shah from Alkaline Wealth Advisors. Please go ahead.
Yeah, thanks for the opportunity. So, what was the idea behind writing off the accumulated losses against the current paid-up equity reduction? And what will be the post-impact, and what is the idea behind doing that?
Yeah, so Sanjay, this is Venki. So I think the idea of doing that was, if you look at the listed entity, because we've been carrying these accumulated losses, if you look at the size of the balance sheet, given the size of our business, the size of the balance sheet is way too large, and that is because of the historical reasons of how the company has gone through over the years. So we wanted to address the size of the balance sheet to make it, to bring it down so that we are able to manage it in line with the size of the business and also service it on an ongoing basis, number one. Number two, the fact that we have accumulated losses in the listed entity. If you want to look at any form of potential dividend and supply in the future, until you wipe off these accumulated losses, you will not be in a position to declare a dividend, if at all, whenever the board chooses to do so. So these are the two factors which we were looking at, and we were able to, thankfully for us, we were able to address that both along with the impairment which we took in last quarter. So the idea is now with all of these things, the size of the balance sheet becomes smaller, and we're also in line with the size of the business, and it will help us manage our business more efficiently going forward.
So Venki, what will be our equity and accumulated loss will be completely zero?
Yeah, once the approval comes through, the size of the equity will come down by half. So from 56 crores, it will become 28 crores, and the accumulated losses will get wiped out.
That's great. So thanks, Venki, and best of luck for our digital trust.
All right, thank you.
Thank you. In order to ensure that the management is able to address questions from all the participants in the queue, we request the participants to please limit their questions up to one. And should you have a follow-up question, we request you to rejoin the queue. The next question is from the line of VP Rajesh from Banyan Capital. Please go ahead.
Yeah, hi. Thanks again. Vinod, you mentioned that 40 million of order book will be executed in this year. So should we assume that 40 million also includes 2.6 million of Horizon 2, or that Horizon 2 could be going beyond 1 year?
A part of, I think about the Horizon 2 component of the 40 million is about 1.5 million, Rajesh.
Okay. And the other thing is, most of this is going to be managed services and the support services. Is that right? That's the way to think about this 40 million.
No, there is about, I would say that about that has got a sizable implementation component as well. So that construct of the 40 million pretty much flows the construct of our revenue by types. So because we won a lot of contracts in Q1 and Q3 and Q4 of last year, and typically it gets deployed over a period of 9 months time frame. So there's a lot of projects that we have won which are under execution, and revenues for those will come in the subsequent quarters, Rajesh.
Okay. And Venki, just on the this capital restructuring side, so once this is done, how much of goodwill will still be on the balance sheet? And secondly, does the capital restructuring process precludes you from, let's say, doing a stock buyback?
Sorry, repeat the last part, Rajesh, the capital restructuring process?
Will it precludes you from, doing a stock buyback? And where I'm coming from is that we are sitting on 90 crores of cash. Our market cap is around 220 crores. So could the board decide to do a buyback while this capital restructuring is going on? Or because this capital restructuring is going on, you can't do a buyback?
Okay. So the goodwill is already reflected, Rajesh. If you look at the balance sheet, we will have about 344 crores of goodwill. So that the impact of this is already reflecting in the financials. Once the approval comes, you will just see the line items move. So you will have the equity share capital coming down once the capital reduction approval comes. On the second part of the question, once there is a pending application with the NCLT, then no other such transaction like buyback will be, the company will not be able to complete it until that process is complete. So to that extent, to your point, should there be a situation like that and the board were to consider, then until this is complete, it cannot be taken off.
Okay. So if I heard you right on the goodwill, you're saying 334 crores of goodwill will continue after this capital restructuring process is over. Is that right?
Yeah, 344. So, in a way, what has happened, Rajesh, is in December when we did the impairment, the goodwill is already brought down to that extent. Otherwise, we were running at about 658 earlier, so that has now come down to 344.
Right. So that 344 is going to continue in the future years, right? That's the way to think about it. Okay. And then CapEx this time was 9.6 crores, which is significantly higher compared to the last few years. So any particular big, one-time thing in there?
No, I think our laptops which are used by Subexians come through their annual refresh process. So we had a bunch of them getting refreshed in this year. So no other specific unusual thing which has led to the higher CapEx.
Okay. And last question on the cost side, Venki. So we did tremendous cost reduction from 296 crores of cost last year to now 278 crores. So my question is, what do you expect in the current year? Do you think 278 is a very good number, or you think there'll be something, some cost inflation? What are you thinking about the wage increases, etc.?
Yeah, I think we have not yet formed up our mind on the wage increases yet, Rajesh. So I think what we want to do is wait and watch and then take a call on that one. So we want to see how the business is coming to in Q1, and then we will make a decision in terms of when and at what point in time we'll make those increases. In terms of overall cost, I think there have been some benefits we have got in the current year because the way we threw up our sales commissions and other stuff for our people based on achievement. So there have been some reductions we've been able to achieve over last year because some people, because we have done the actual true up of those payables based on how performance has happened. So to the extent there could be, so that has also helped us depress costs in the current year. In terms of how it will look next year, I think we are not planning to do anything unusually different next year except for the new investments which Vinod has called out. But you know our business, right? It's a function of how the revenues pan out. So our costs never necessarily move linearly based on how the revenues grow. So therefore, we are not planning anything unusual apart from the newer investments which Vinod called out.
Okay. Thanks a lot, guys, and all the best. Appreciate it.
Thank you.
Thank you. We'd like to remind the participants to please limit your questions up to one. We move to the next question from the line of Amit Mishra, an individual investor. Please go ahead.
Yeah, hello guys. Congratulations on good set of numbers. I just have one question. The other questions are answered by getting other participants. India business is still quite small for us. Well, there's a lot of activities happening here. So one part of the question is like, do you see in future the business going, proportionately or whatever? And the other question is, what is your engagement with Jio and Airtel, like the major telecom operators? What sort of engagement? What is kind of business you are doing, and what are the scale of potential there? That's it. Yeah.
So first with respect to overall, it will remain where
Excuse me, this is the operator. Mr. Padmanabhan, we are unable to hear you clearly. Mr. Padmanabhan, are we connected? Participants, we request you to please stay connected while we check the line for Mr. Padmanabhan. Participants, we request you to please stay connected while we check the line for Mr. Vinod Padmanabhan. Mr. Padmanabhan, can you hear us?
I can hear you. Can you hear me?
Yeah, we can hear you now. So continue, please.
Yeah. All right. So I was saying that the amount, the ratio of the percentage of the business we expect it to be relatively similar to what it is current. With respect to the customers, we don't want to get into the details of what the customer engagement is, but if we can confirm that all the operators are India other than the governmental one, that is the BSNL, are our customers at this point in time, and we have good level of engagements with them. So that's how I would put around this thing. But the amount of business that we expect is going to be in line with what we had in the previous years.
Right. Okay. So you don't think that the percentage of business in India will increase tremendously in coming years? Like.
All right. So for our new areas like IoT, Transmetrics, obviously the business from India will be significant because we have now for the IoT we are working on two governmental sector. One of the governmental sector is in India, so therefore the engagements there are you expect that area to grow. So out of the core, which is the telecom side, the percentages would be similar to what we have. On the new areas, we expect India to be significantly more than what it is currently there.
And some on fintech, your new area where you are trying to extend, fintech and e-commerce. Are you going to look that extension something, what Jio is doing with Facebook? I'm just mixing up things happening in India. It's Subex well placed to take some benefit out of that deal, or SIM radios and future, or telecom players or digital players or cloud players, they are going out in these streams, and can Subex come into this picture, or is not?
Yeah. So one of the things that globally the telecom operators are looking at is the enterprise side of business, and same is the case that you asked for. So as and when that happens, we will have we have a strong portfolio that can support that movement of telcos from a retail to a enterprise heavy business, and in line with that, we will get benefited because we have a very strong portfolio to that. But to answer your question on the fintech, of course, the fintech industry in India is very, very robust, and a lot of activities happening in fintech in this area, and we definitely want to take leverage that, and particularly around our new areas. But on the core, as and when the enterprise business gets ramped up, that's what the Geo is planning with the relationship with Microsoft and others. Definitely, we will have a play there.
With Facebook, you mean? Yeah.
Sorry, I didn't get that. Can you come again?
Geo planning, you said Microsoft, but it's Facebook, right?
No, they have Facebook made an investment, but they have made a strategic relationship with Microsoft for take their Azure platform. So that happened about a month back with which happened. So that was towards beefing up the enterprise business.
Yeah, the Facebook investment, we were given to understand that Geo will exploit WhatsApp, the application for their e-commerce business side of things.
Yeah.
So I was very interested to see if Subex is going to leverage existing relationship to. Yeah. Oh, sorry.
So we don't have a direct play there, but if you look at, we are doing around the areas of analytics, revenue management, things like that. So we will have a coverage of that area. But the big change will be when they are talking about going to the enterprise customers in a much bigger way. And globally, the telecoms are expected to drive upwards of 40% of the revenue by 2025 from enterprise business. So it's a big push for globally all telecom operators to start offering the enterprise side, and that is where our play would be much more prominent.
Yeah, I was guessing that. So thanks for confirming that. So if you have figures handy, can you tell me also FCF and operating cash flow for last year?
Mishra, this is the operator. Can I request you please rejoin the queue, sir? We have other participants waiting. Thank you. The next question is from the line of Mahesh Jagta from an individual investor. Please go ahead.
Yeah, my question is to Mr. Vinod. Are we focusing on consumer IoT or industrial IoT in Europe? And if it is industrial IoT, I have not seen any partnership with industrial IoT platform companies.
Okay, so our focus is definitely on industrial, that is the operational technology IoT, OT-IT, where there is a convergence between OT and IT. OT means operational technology where large industries use. That's where we are focused on at this point in time, and we have several OEMs that we are working with at this point in time, creating unique propositions on that area. So they are not announced at this point in time because we are not got into the phase yet. But just to reconfirm that, we are focused on the OT-IT convergence as a with our IoT security, and we have several OEMs that we are working with in this area.
Okay, so in Europe you are mainly focused on industrial IoT.
Not just in Europe, but I'm talking about globally. We are talking about industrial IoT. When I talk about industrial, it is also anything to do with a large operational technology. So large infra like utilities, water power plants, anyone who has got a large operational technology, industries have manufacturing, pharmaceuticals, all those countries, all those company, let's say entities who have a large operational technology, who is now in the verge of deploying the Industry 4.0, where they are bringing the OT and IT together. That is where we have a large issue of cybersecurity and IoT security, which we are trying to address.
But I am not seeing the tie-up with any of the major players like ABB, Honeywell, Bosch or Siemens.
We are working with some of them already. We are not in a phase where we can announce a partnership, but we are in various phases of discussion with many of the OEMs around that.
Okay, now coming to the digital identity service, do you foresee usage of this digital identity service in GeoMart platform for digital onboarding as well as identification of the Kirana stores?